This is Michael Fox, and this is the Prospector News Podcast. And joining me today, we have the managing partner of the CPM Group, Jeff Christian, back on the show. Welcome, Jeff.
Thank you for having me back, Michael.
Always good to have you. So today I'd like to talk to you about the silver market. Silver's been on a bit of an upswing run here for the last several weeks, kind of leading it over gold, I would think. But you're the data guy, so I'll leave that up to your discretion. But let's talk about the silver markets.
Yeah, silver and gold are kind of like racing up the hill, and they take leads. Silver led gold in December, and then gold led silver in January, and then they both came down in February, and they've both gone up sharply in March. And obviously the key issue in March, I think, was the collapse of a few mid-sized banks, the collapse of Credit Suisse, which is anything but a mid-sized bank, and investor concerns about the stability of the financial system, which caused investors to race into gold and silver. And the markets, as we've been saying for a long time, gold and silver markets, the supply and demand balance are geared up so that when investors come into the market, they have a more powerful effect on the price than at other times right now. And we saw that in March for sure.
Yeah, there's nothing like a good bank run to put fear of God into people, is there?
Yeah, it's sort of look at the stuff in your hand and you say, this is money.
Yeah, that's exactly right. So when it comes to the silver market itself, then if this is merely a speculative bubble, almost in reaction to the banking crisis, as opposed to a supply and demand issue, am I correct in reading what you're saying?
Yeah, that's pretty much right. I mean, the bank problems that emerged in March are symptomatic of a late stage of a long economic expansion, if you will, and certain problems that have been building up in the financial system as well as in the overall economy. And to some extent, I guess the problems on a global political level too. So all of those problems are still there, and they're gathering steam, and they're causing investor concerns. And that's the underlying tone, right? And then the bank issues came on top of that. And so what we've been saying is, the gold and silver markets, there's a lot of metal out there, but a lot of the metal is owned by investors who want to sell it at higher prices if they want to sell it at all. So the market's relatively well supplied, at least on a 1,000-ounce bullion bar level. The smaller bars and official coins continue to be in tight supply because there's very strong demand from investors for small bars and coins. But what we see is that the way the prices reacted to the bank crisis in March, bank crises in March, is indicative of how we should expect them to behave gold and silver price-wise when things get even worse. And then the question is, when does it get worse? And is it late 2023 or is it 2024? When do we have the next recession? And are there bigger financial issues that are probably going to come and worry investors even more?
Yeah, that's true. Surprisingly, in the last Bank of Canada rate announcement, which was no rate change, they actually suggested we might avoid recession, but I'm having a hard time picturing that. How about you?
It's funny. You can make that argument economically. I wouldn't make that argument. I do think that we will head to a recession. The question in my mind is not, do we avoid a recession, but do we, how deep of a recession and how long of a recession do we have? And I've said it several times in terms of our economic analyses. A lot of things changed in the global economy and in the domestic economies and in financial markets with the global financial crisis and Great Recession of 2007 to 2009, and then the international debt crisis in Europe and in the US with the Treasury downgrade in 2010, 2011. And so a lot of those standard, oh, this is the way the economy works, and this is the way interest rates interact with overall economic condition. A lot of those old metrics don't necessarily apply anymore. So people will say, oh, an inverted yield curve has always been coincided with a recession, plus or minus 2 years. Well, plus or minus 2 years in a period of time, from World War II to 2008, when recessions occurred every 6 years, that's really a bad track record, And they always say from World War II through 2008, this always happened. Things changed in 2008. And I think that you have a radically different situation. But that said, I look at fiscal policy and fiscal constraints and fiscal reductions of stimuli. I look at overall economic realities, the supply of goods and services and the demand for goods and services. And then monetary policy is, in our view, actually the third least most important factor. It's that real economic supply and demand factors, and fiscal policy, we think, are much more important in terms of economic trends. But monetary policy obviously has an effect. I just think that gold and silver commentators overemphasize monetary policy and they ignore the real economy and fiscal policies. But we put it all together and we see the fiscal constraints, we see the supply and demand constraints, supply constraints and demand cooling in the real economy. And then we see higher interest rates and a reduction of monetary supply in the United States. And you've seen that up until now in Canada, Europe, Australia, Singapore. Those other countries are all starting to back away from it. The US is sort of saying, yeah, we're not going to back away from it, but we're at the top of our period of increasing interest rates. So I put all that together and I say, yeah, we're going to have a recession. I'm not sure that it's going to be 2023 because there's still a great deal of strength in the real economy. But I think by 2024, 2025 at the latest, we have a recession. And I think it could be a significant one that could really cause investors to be very much concerned, sufficient to drive them into gold and silver at much higher levels of demand than we see right now.
Yeah, I'm concerned about the next recession too, Jeff. I always find that data moves to the mean often, and we're long overdue for a recession. And the last one really wasn't that long. I'm just thinking that, if the law of averages, holds, we could be in for a pretty deep, long one because of that. But that's not based on anything other than just gut feel based on past histories. What does the data tell you?
Yeah, the data tells us that you've got some really significant issues that have just been getting bigger and bigger, really since 2010, 2012. And they need to be resolved. And at the same time, you're seeing a very sharp reduction in international cooperation among governments. You're seeing the increased bifurcation of China from the rest of the world. It's not just the United States, it really is the rest of the world. And, people say that Europe follows the US in its queue toward China, but that doesn't explain South Korea, Japan, the Philippines, Vietnam, all the other countries that are closer to China that are extremely concerned about future trends. And then you have Russia's invasion of Ukraine. You have all kinds of issues within Europe. You have a reduced global capacity for governments to say, hey, we're going into a deep recession. We have to coordinate our policies to get out of this. And then you look at it on a domestic political level, and you're seeing the same kind of reduction in the ability for the politicians to really respond to what could be a significant recession and significant economic problems. And you put all that together and you say, yeah, we could have a relatively serious recession at some point, and it could, be relatively deep, maybe not as deep as the recession in 2007 to 2009, maybe not that long, but maybe that long, but not quite that deep. But I don't think it's going to be like the little recessions we saw in 1991 or 2001, or, the one in 2020 was really a manufactured recession. It wasn't like any other recession that's ever occurred for real economic reasons. So we're looking at a world that's got some pretty nasty economic storm clouds on the horizon, and that horizon's getting closer.
Yeah, also mixed in with those storm clouds, I guess there's there's the lightning and the thunder that go with it, which is the deglobalization of the world economy. Do you see that as going to make this next recession more problematic? Or is it, just it is what it is and we'll just live with it?
No, I think it definitely, the breakdown in international trade and international cooperation and what you call deglobalization, I think those are definitely factors that will help contribute to the onset of the recession and the potential depth and length of it. There's a very high correlation between international trade and overall economic conditions. And we've seen international trade really suffering for several years now. It's picked up a little bit in recent times, but it looks like it's going to take another dive down. That's a really bad indicator for economic prospects going forward. And again, it's tied in with political issues that just make it that much more difficult to resolve.
Okay, so given all these interesting times that we find ourselves living in, are you long or are you short on silver and precious metals going into a recession? I guess would be the question that most of our listeners would probably have at this point, and then why?
We are telling our clients, and personally, we are long gold, long silver. We're actually long platinum, not because of recession concerns, but because of some specific changes going on in the catalyst chemistry in automotive catalytic converters. And then we're negative on palladium, so we wouldn't be long palladium. That's on a longer term basis. On a short term, very, very short term basis, like, this week, we have been telling our clients for a couple of weeks, as the prices got to very high levels, we were saying, they could go higher, but they've gone up. Gold and silver have gone very sharply higher very fast, and probably have overshot their short-term things. So we've been telling clients, don't necessarily go short, but stand aside, because these prices could come down. And, I guess a little bit on Friday and a little bit today, they're showing the capacity to fall as well as rise. So
a wait and buy the dip kind of mentality.
I draw the corollary to March of 2008. March of 2008, the gold price had been rising from 2000, 2001 into 2008, and it started the year probably around $800, got up toward $900. In March of 2008, Bear Stearns went bust, and the Fed engineered its takeover by JP Morgan on a Sunday. I believe it was the 16th of March. On Monday, the price of gold shot over $1,000 for the first time ever. And we told our clients, don't stop buying. We had been telling our clients, buy into the rally all the way up to $900. But when it got over 1,000, we said, stop buying, buy some $900 puts, August puts. And when you see the price back at $900, call us. We probably tell you to sell those puts back for a profit and then start buying again. By the end of that week, the price was back down to 904. And by April 1st, another week, it was below 900, and it stayed below 900 for a couple quarters until Lehman went bust in September. So we're comparing March of 2023 to March of 2008 and saying, we're sort of like in the foothills. We've seen a financial crisis. We've seen how the gold and silver prices react to that financial crisis, but this isn't the big one. This is just a test match, and we'll have the World Cup 2 or 3 quarters down the road. And that's sort of where we're at. So we're sort of saying, don't get too bullish on a short-term basis, but be very bullish on a long-term basis.
I've been hearing stories and rumors out there, and again, this is one of those more for the retail people that are listening than the bigger picture, because I know it's not a supply and demand issue other than for these specific products. But I'm hearing that bullion dealers are running out of the 5 ounce and the 1 ounce coins. Is that going to be problematic, or should everybody just cool their jets and kind of wait it out?
I'm not quite sure how much they're running out of them. They are in tight supplies. I mean, if you look at the premia that are available for the maple leaf and the eagle, I mean, I think spot gold or spot silver was about $25 this morning, and maples were going for about 32 and eagles about 38. That's on a wholesale level. So they're in short supply, and that's probably going to continue, and it's going to continue to confound people who want to buy into silver. The alternative is to, if you have the cash, to go into a 1,000-ounce bar, but a 1,000-ounce bar at these prices is $25,000. So that's, those are significant investors that can do that. And obviously, I think you'd pay less for a 100-ounce bar or a 10-ounce bar than you would for official coins. There are medallions that are out there, but you really have to worry about privately struck rounds because they don't have the resale cachet and the resale value that official coins have. And there, you're seeing strong demand for those because people can't find the official coins, but that could cause issues down the road when it comes time for investors to say, I want to take profits or I need to sell those coins.
Yeah, definitely. It's one of those, there's got to be a market for the coin. I'm shocked sometimes that, there's a higher premium on the American Eagle than there is on the Canadian Maple Leaf, because at the end of the day, there's still a 1 ounce troy, or 1 troy ounce of silver. Regardless, they have the same value.
I have to be careful because they're both good clients of ours, but there's a big premium on the Eagle. I think that has to do with shortages of supply that the U.S. Mint has had some issues for a couple of years now in terms of turning out the volumes that they want to turn out. I'm a little bit surprised. I'm actually, to be honest, much more of a fan of the Maple Leaf, simply because I think that if you go around the world and you say, I have a silver or a gold coin, I think if you have a Canadian coin, you're probably better received than if you have a US coin.
Yeah, and I guess that's geopolitics. So that's just the way, the nature of the beast. I have silver euros, I have silver pandas, I have silver Canadians or Maple Leafs rather, and silver eagles. And as I say, they're all 1 troy ounce. I have some private ones as well. Again, they're all 1 troy ounce. So to me, they're all of equal value until someone tells me otherwise. So
that's exactly right.
We've talked about the probability of recession. We've talked about the short-term bullishness, or being long short over the period of time going to the next recession. We've talked about the short term within the next few weeks. I guess the bigger question is, where are we actually at in the metal cycle? going forward. Like if we're going into a recession and if it's going to be as, nasty as we think it might be, the propensity of government would be to try and push out infrastructure, and that's going to require metals and commodities. So again, I guess on paper, given that kind of a backdrop, where are we within the metal cycle, and what do you see as the longer term?
Yeah, I think, I mean, one of the things that CPM Group's known for is our micro analysis of individual markets. And I think that where we are in the price cycle varies from metal to metal quite distinctly. Now obviously gold and silver trade like financial assets, and they tend to rise as you get into economic problems because people seek to diversify their wealth or their investment portfolio. They're looking for currency hedges or inflation hedges or protection from a downdraft in stocks or bonds or financial instability at their banks. So gold and silver tend to do well going into an economic recession or a financial problem, and we expect them to continue to. More industrial metals like lead, zinc, copper, and aluminum will tend to get damaged going into a recession because there'll be a reduction in demand from the industry that use those metals. Now, as you go into the recession and go through the recession, as you said, there's usually government responses to the recessionary conditions. Infrastructure bills are passed and you roll things out. I remember in late 2008, the US was talking about like a $2 trillion infrastructure program, most of which was never actually spent. I think after about a year, we had allocated about 10% of it, about 200 billion. China at the same time had like $1 billion infrastructure build. And the day they signed it into law, they were ordering steel for rails and copper and aluminum for building new high-speed rail lines and new trains and new highways and stuff. So you will see that later, and then you have metals like platinum and palladium. They're primarily now used in the auto industry. The auto industry has been suffering really since 2017, 2018, 2019. It continues to suffer. And that's going to be a headwind for platinum and palladium, we think. And then you have this whole issue of energy metals, where I think and you're starting to see it now, where silver is good, molybdenum is good, but you're starting to see a lot of people question the wisdom of electric vehicles and the speed at which you can build out that infrastructure. And just today, the International Energy Agency issued in a weekly newsletter. They said, the energy transition is coming faster than people think. It has been for a couple of years, but we think that there are some nasty headwinds there. Where are you going to get your electricity? The fact that electric vehicles don't really reduce carbon dioxide production all that much. It simply shifts it from the vehicle to wherever you're using coal or natural gas or petroleum products to generate the electricity. So we think that energy, when you say energy materials, you have to immediately say, okay, let's segregate silver, which is used in solar power, and molybdenum, which is used in high strength steel for windmill towers, from the things like cobalt and lithium, which are used in electric vehicles. And I think that those things could suffer for a variety of reasons. One is economic recession, but also sort of like a gathering reality check on the part of consumers, governments, and others, sort of saying, this stuff is good and it is coming along, but it may come along much more slowly than we've been thinking over the next 10, 20, 30 years. So I think it's a mixed field where we are in the metal cycle, depending on which metal you're looking at.
Yeah, that's fair. And truthfully, the supply and demand curves of all the different commodities and metals has always been different. So I I can't recall a time where they were ever completely aligned all in the same direction at the same time. So you should expect to have those types of situations like you just described.
Yeah.
So going forward, you've got a silver yearbook coming up soon. When is that going to be launching, and how do people get to participate in the launch? And is there an ability to pre-order their silver yearbook?
Yeah, we released our gold yearbook at the last Tuesday of March. We will launch our silver yearbook on May 16th. So the middle of May, we'll have a briefing and we'll release the book. We have YouTube videos that end with a place where you can go to our website to pre-order the books and also to sign up for the briefings. The briefings will be online and it will be free to the public to listen in. You can go to cpmgroup.com and pre-order the silver yearbook or order the gold yearbook. These come out as ebooks now. So like with the gold yearbook, you buy it online, you download it, or it gets delivered to you, right away. The silver yearbook won't be available till May 16th, but it'll be the same kind of system. Platinum yearbook comes out in the middle of July. Then you can also look online. You'll see a place where you can register to plug into our briefing. And there'll be a place at our website where you can do that. And you can always, I guess, send a note to info@cpmgroup.com. And sign up. And then you can also sort of pre-ask questions, or you can wait until you've heard the presentation to ask the questions on the day of the briefing on May 16th.
Perfect. I will try and add those links to the bottom of the description of what we talked about in this podcast, so people can go there and pre-order the books, and also register to be a part of the presentation on the 16th of May.
Yes.
Now, you and I are also going to see each other within a few weeks in New York, participating in the conference being put on by the New York chapter of the SME. I'm doing a communications panel to talk about how we can, as an industry, communicate better. But I understand you're on a metals panel.
I'm on a panel that talks about what you just asked me about, I think, which is the business cycle and economic cycle and price cycle of metals, and where are we? And I think they've asked me to sort of focus on energy metals and energy materials to some extent. I may also be asked to talk about gold and silver. So I'm at that panel, and that'll be good. Two of my partners, Carlos Sanchez, will be speaking in a different panel, I believe, about hedging strategies. CPM Group has the World Bank said it's probably the most efficient way to hedge commodity price risk when we were working for them in the late 1990s. We have a very effective way for producers and consumers and others to hedge using options. And then Rohit Savant, another partner of mine, will be talking about gold and silver, I believe.
Yes, it's, I enjoy this conference. Particularly, it's a great opportunity to learn from a lot of industry experts that you don't otherwise see at, the more traditional investment conferences, because they don't really deal with retail investors. They're dealing with the institutional markets. And there's a lot to be learned there. There is a link on the prospectornews.com website to the conference if you're going to be in the New York area from the 8th to the 11th of May. It's probably a worthwhile side diversion to come and take in some of the courses and presentations that's going to be there. Thank you very much for joining me, and I look forward to seeing you in New York in a few weeks.
I look forward to seeing you too, and bring some good weather with you.
Yeah, please. I'm tired. I don't know about New York, but I'm tired of winter here out in Prince Edward Island. So hopefully we're going to have some good weather soon.
Take care.
You too. The Prospector News podcast is for educational purposes only. The opinions expressed are those of the participants and are not to be taken as investment advice. Listeners need to do their own due diligence and seek advice of a licensed investment advisor.